This is my analysis on the stock market. Before I bring that to you, watch this special information. This tells you about our style of analysis and about how important it is for you to take trade ownership of all your own trades as you apply the way that we analyze the markets or that anybody does. So that's really important. It has to be your own trade. And this is that 1 month special, 50% off on our level one. You're going to get daily stock market analysis. That's SIR, stock index report on the S&P 500, NASDAQ, and Russell 2000. It's fantastic because you're going to see our 2-hour analysis, daily and weekly charts and projections in key levels and the momentum conditions. You're going to get our momentum tracker for investors and position traders, over 1,000 symbols with our custom algorithms built in there. And you'll get our Spider Select weekly review. Great work in there on XLE, XLF, XLI, XLK, and XLP. You're going to love that review. You'll be able to use our trade organizer, be on our Discord server, and attend Market Week live events. That will give you a very, very good idea of how we do things all of the time, every week. And this membership, which is only $10 for the first month, will recur at $19.95 a month, and you can cancel or upgrade at any time. Any questions, write to Matt at askSlim.com. This is my analysis on the S&P 500. We're going to look at our level 4 indicators. These are our proprietary indicators. Give us a great feel for the market. You'll enjoy that. And you'll see our market condition monitor. That's the MCM Pro, as I can give you a great look at just the best stocks that you could possibly trade in there, because we have 135 stocks that are in there, and you will love it when I show you that. So here comes my analysis on SPY. Before we get into the charts, just some background stuff this week. Stock market did get an early lift on Monday as there was a report out from Washington Post that said that Trump's tariffs would be, well, less than originally expected, maybe much more targeted, but later on that was downplayed. So the stock market made its high for the week in the first 3 hours on Monday, and after that it was really to the downside all week long. As the indexes got weighed down by tech stocks as interest rates moved again to the upside. Friday's payroll number was much stronger than expected, up 255,000, unemployment rate just a little lower than expected at 4.1%, and the stocks took a big hit to the downside. I think those strong payroll numbers are an anomaly, and we're going to start to see weaker things moving forward. The biggest focus this week was on China, as we saw the 10-year in China down below 1.6%. And China says that they are going to stop buying their treasuries, and the reason for that is because it's killing their yuan. And with European economies very, very weak also, and the U.S. still staying strong, we have this big interest rate disparity, and that is pushing up our U.S. dollar very significantly. Of course, with all this weakness in China and in Europe, they're all really exporting their deflation here to the U.S., and I expect that we're going to start to see that in numbers moving forward, and our economy actually slowing down as that all spreads to the U.S. So interest rates and the dollar, I expect that they're going to peak actually in the first quarter. And it's pretty hard to ignore some of the other things that are happening out there, especially real estate, which is really, really slowing down as interest rates move up, and we see inventories building all over the country. And of course, affordability is near a record worst levels that we've seen. And all of this is really bad for U.S. earnings. And investors, they may be just getting a hint of that, as now the stock market is showing a lot of softening. For the week, stock indexes down between 1% and 3%. Russell definitely the weakest, as interest rates are affecting that, down about 3% on the week. Remember, those Russell stocks are really the zombie stocks. Those are the ones that have the hardest time making money and the biggest borrowers of money. So as interest rates go up, it affects them the most. Bond market 30s, they drop about 2.5 points. 10-year yields up 25 basis points on the week here early on Friday morning. Gold jumps for the week as I think it's finding a safety bid in there, but I have doubts the gold or metals markets are going to be able to fight these higher interest rates right now. So we may be seeing just a little bit of a blip on the upside, though. RV did show you some great analysis on copper, and that's one of the metals that we're really liking in here. That one is looking like it can do better than maybe the other metals. Dollar up about 0.5% on the week. This is the 6th week up for the dollar in a row, and 14 out of 15 weeks, as this big interest rate disparity between the U.S. and the world is forcing money here into the U.S. Oil market pops to the upside again. This is really on the cold weather, but our analysis just nailed this, is that the low in oil came just about on the exact time that we expected, and we saw that big upside move in the oil market going on right now. Take a look at our big picture analysis if you are a member, and you will have seen our upside targets for the oil market, and it's really moving up nicely within that analysis. So let's take a look at the stock market as we look at our multiple time frame charts. This is a look at the charts. Okay, well, we'll come back to that one in a moment. Here is the chart right over here, and this is 3 different time frames that we're looking at in here. Just get my pointers up here, and this one right over here is the weekly, this is the daily, and this is the 2-hour chart. And you're going to see that there is something going on here that has the market really in some problems. This line right over here, this thick line there, is really the momentum conditions. This is our reversal scout on this weekly chart. And when it turns over, as you can see right over here, that's not a good sign. So we're looking at the weekly SPY, and we have some significant bottoms that occurred. And the Russell bottom, as you can see, occurred right over here, and the S&P bottom occurred right over here. And they're both really rolling over. All the major indexes are doing so as this momentum turns weaker in here. And this says to us that there's likely going to be a decline coming out into the market into mid-year. So we could be making a very significant top. But until we break this key level right over here, which comes in at around 569, we really don't have a breakdown. There might be a little earlier one, and I'll show you that on the daily chart. But right now, this market really looks to me like it is rolling over. So this is the SPY, the S&P 500 ETF, on a weekly basis. Let's take a look, though, at the daily, and this is really significant. You can notice this head and shoulders top that's forming in here, and we're getting right down to that support level right now. Take a little closer look in here, and you can see the cyclical patterns as they show up in here. This blue dotted line shows a slight shift. This happens a lot when you get to year end and money flows get a little strange because of tax situations and reallocations. And here you could see the market as it failed in the resistance zone, tried again and came down again. This key low right over here, as you could see, 580.91. If you break that, you really are completing this head and shoulders top, and we're getting down close to that right now as we're having a weak opening on Friday. Also, you can see in here that this is the reversal scout on the daily chart, and that really pointed to the top here on December 18th as this rolled over, and this head that formed in here had a negative shape to it. In other words, the low here was lower than this low. That is negative. You can see in our slim ribbon PO these sell signals that are coming over here and warning you of the negative conditions. You can see in here when it was positive, it was giving you those what we call resumptions in momentum to the upside. Here's the resumptions in momentum to the downside. This cyclical pattern in here suggests a move to the downside through the end of January. So the next 2 weeks offer a lot of risk. And if we get under a 580.91 in the SPY, that's pretty negative. Also, look on the bottom here is the option bias indicator. Now, I developed this many years ago, and the reason for that is because I knew a lot of people that were trading options that would get in the way of the moves. They would essentially say, okay, the market's going up, it's overbought, or we're going to sell premium, and the market would run them over with their momentum. So I developed that, and you could see it was positive through here as the upside momentum, saying bias your option positions to the long side. Here's where it neutralized, where it turned yellow, and now it's red, as you can see on the bottom. And here, warning traders, bias your positions to the short side. So in other words, the highest probability of you getting run over trying to sell short side premium would be on the downside. So that's a cautionary note. If you like to sell options and you're selling puts, these next 2 weeks really offer an opportunity for the market to fall and potentially for there to be a squeeze in puts, and that would mean a squeeze in implied volatility. So that's really an important thing to look at. Head and shoulders top forming in here, breaks under 580.91 is negative, and this formation in here is very negative, which points to a potential decline through the end of January, and we don't know if it's going to stop over here, which I don't think it will, or some other supports that are down over here around 568. That's an important number also, as we said, looking over here. Going back to the weekly, this level right over here that we talked about is about 568. So you could see on the weekly, it's very important. On that daily, it's very important. And we could see the market fall to that level just in the next couple of weeks, or even worse. This is a worsening condition that we see here in the stock market. What would it take to fix this? Well, we always want to look at both sides, and it would mean momentum would have to improve, the market would have to be rising, and you'd need to get up above this level right over here, where it's been failing in those resistance zones, and the top of that level right over there is at around 602.50. So you'd need to get it moving over 602.50 in order to repair this. I think that is a low probability, and the highest probability, as we'll see, declining market. Let's take a look now as we look at the 2-hour chart right here. This is always important to look at, and you can see in here the 2-hour momentum turned down. It tried to turn back up, but it is turning down again. Right over here, this is the MCI, the market condition indicator. When it's in between the 25 and minus 25, it's neutral. It's turning down again. It couldn't get up through it, and if it crosses under the minus 25, it will turn negative, and that will give you a warning that things are getting a lot worse on this 2-hour chart. We like to use the 2-hour chart. It's especially good, I think, for intraday traders that want to have some sense of direction, to use it for direction or for position sizing. And when this turns negative, and you can see in here the slim ribbon turning negative, that's when these turned red, when the candles turned red, as you could see here. And here's the slim ribbon PO as it is red and then has turned down again. All of those, even on the short term, are quite negative. So again, moving here onto the weekly chart, it shows you the rolling over. On the daily chart, this dangerous pattern in here. And again, under 580.91 is really a negative occurrence. Let's take a look now as we look at our market condition monitor. This is just an amazing application that's available to our level 3 and level 4 members. And I want to look at this because this builds all of our algorithms into that. And I have this set to short term right now. You can see in here based on the trader style. So short term, intermediate term, near term. I'll take a look at those in a second. But here we are at short term. And you can see in here looking at the major indexes, this SPY is bearish, and this is slightly bearish on the QQQ. So we're getting a little less weakness showing up in the NASDAQ. IWM bearish, the Dow is bearish. That's looking at it on the short term. So if you're like a few week trader, that's really what you're going to look at. On the intermediate for investors, we're actually just getting some downturns in here for investors, as you could see, and SPY is slightly bearish. That turned slightly bearish on December 30th. The QQQ, the NASDAQ, went from bullish to neutral on December 31st. Look at the IWM. On December 20th, this turned slightly bearish, and on December 20th, the Dow turned slightly bearish. So if you were a holder of positions or an investor, this would give you a sense that there's a reason to have caution right now, and you might want to be lightening up on positions. If you're an intraday trader, as you can see right in here, and I'm looking at the near short term, this looks at things as short as 15 minutes, daily 2 hour and 15 minutes. Look at these readings. I mean, they are very bearish, as you can see in here, as they have gotten worse just today in these readings, and they have been warning about the negative conditions of the market. So if you are a active trader in the market, position trader, you can all just dial this in to the style of trader that you are, and you can see the conditions are negative. Again, this is the market condition monitor. We call it the MCM, and this is available for level 3 and level 4 members at askSlim.com. So that's it. That's looking at the stock market today. Definitely a weakening condition. I gave you the numbers to look at in there, and if you see us underneath those numbers, the market could be falling very hard. The market might be able to save itself, but I have doubts based on all of the stuff that's going on in the background. So we could see the market try to move to the upside or recover, but I think those recoveries will not last.